All right. Good morning, everybody. Not too heavy on the economic front this morning. We got jobless claims and a couple of Fed speakers. The ECB minutes is going to be more of a report than anything else. We do have additional auctions today. This is really important to keep your eye on. These additional auctions kind of kill the notion of the way we normally approach the start of lunch or the end of lunch. Typically, we say that a trend or a breakout that's happening at lunch is a false breakout or a false start, not on days where we have additional auctions. They're all at 11, which is nice. You know, some days they're at 11 and then 11:30 and then 1. So at least today we're getting them all wrapped up into one spot. And then the consumer credit, which it's definitely worth being aware that it's there, what time it's coming out, but I don't expect it to have too much of an impact on us today. So as usual, we want to game it out, asking the questions, what's more likely? That weekly expected move low has held. We're back inside the box. Generally speaking, we close inside the box, more than 80% of the time. It makes sense, stands to reason that even now, yet again, we're back inside the box. So when we game this out and start asking these questions, what's more likely? There is the range from our current Globex high to the current Globex low. We could just maintain that. We were up on the day, better than we are now, but kind of gave it off a little bit with some violence that came in. But this could be our trading day. It's one of the three theories. It's not very likely, but it's on the table. So if we were to discount that and say, okay, we recognize that that's the possibility, it would be a fairly muted trading day. It would basically be the same size as yesterday's trading day. And I would honestly use yesterday's low and yesterday's high if I was expecting this day to be a range day. And you can see that it lines up pretty close with what we already had for a high on the Globex. That would put us between 4,500 and 44.45. So, a good 55-point range. And in a normal world, 55-point day in the S&P would be a good day. So, there is that. I don't expect that though. There's going to be Fed speakers today. They're going to continue to try to get this market to sell off. Right? They're trying to. They're all coming up with ingenious things to say that can get this market to devalue itself a little bit. I posted a headline on an article yesterday that talked about getting investors to sell off more to get this market to down to more reasonable levels. So they're going to do their best to do that again today. I want to watch for them at the different time frames they're going to be speaking. Williams will be so late in the day it won't even matter, but you got Bullard and Evans and then the jobless claims. All right, so that's scenario one. We stay range bound, unlikely. Scenario two is that we break yesterday's RTH and begin moving to the upside. You want to kind of game that out a little bit. If we did manage to get through 4,500, what would we have in store for us past that? We have a cog line at 45.11. It's the COG, center of gravity. So we have that. And then we have the institutional pivot point from yesterday's Globex, right around 45.30. And at that point, you kind of want to ask the question, what's the ADR for the day? The ADR is the average daily range. We've been using a 1 month ADR. A market month is 20 days. This ADR is designed to basically ask the question, what's the day by day size of the candle? Count up 21 days, divide them, gives you your average. So the average right now in the S&P is 1.7%. So when we mark these highs or mark these pivot points, kind of want to ask the question, how realistic is it that we could actually hit one of those lines? Yesterday's Globex high is 1.1 percentage point away from our current location. We're basically up, a dime on the morning. We could easily move another 1%. That would give us, say, 1.2, 1.25%. And we got an ADR of 1.7, so it's not out of line. But that 1.7% is for the entire 22-hour trading day, and more than 12 hours is gone already. So if we're going to make that 1% move, it's going to need to be aggressive. We're going to need to see this market really start to get up and move. Speaking of getting up and move, I mean, just, not very long ago, maybe 20 minutes ago, we had a whole lot of volatility come in here, and then it just settled right back down again. So, the catalyst is there. The potential for this market to really shake up is on the table. So that's our upside measure. Want to do the same thing to the downside, game it out, same scenario. If we don't hold the middle, if we don't hold that range today and start breaking down, where are we going? We got the weekly EM low. We have yesterday's low. Yesterday's low is 44.44, give or take. Seems pretty close. I want to make sure that we validate any levels or lines or pivot points that we think we have in play. Go out to the volume profile for that. From our current location to get back down to yesterday's low, you're looking at 0.75%. That's well easily in line, especially with jobless claims on the table. So we're outside the volume profile. When we're outside the box, we expect to come back inside the box. We were moving in that direction. It's likely that we're going to continue to move in that direction. We're still getting higher highs and higher lows. So as long as this turns around before we get back down to this previous low, then we'll be able to make a statement that we have a full set. All right, a full set is a higher high and a higher low, another higher high and another higher low, two higher lows, two higher highs. That's a full set. We don't have a full set yet because we're still headed to the downside. So we need to get that full set first before we can validate. Excuse me, before we can validate that. We're above the last level of support, 44.67. Got a collection of volume around that area. There's no overhead resistance past the value area low, the VAL, which is at 45.06. That should get us inside the box and heading back towards the point of control. But it's the downside play that we really want to focus on, gaming out. If we were to break below yesterday's low, what would we be focused on? come out to, say, the daily time frame, look left past yesterday's low, which happened to be tied in with this IX10 pack back here. $4,400 is the next line in the sand. We get through that cog line first at 44.11 and then 4,400. I think it would take a significant amount of news to get us down into that level. I don't think that it would be subtle. Tick, trend, AD, UVol, DVol, market breadth, cumulative tick. You should see it lit up across the board if we're going to make moves to the downside like that. Taking a look at the Nasdaq, same situation. We're range bound, sitting inside of yesterday's price action. It's a fairly good size range. We could easily stay inside that range for the day. 14,650 and 14,400. Plenty of room, right? It's 250-point range. And while I consider this the least likely scenario, it is on the table, and it's one that's worth recognizing. On a bigger picture, this is a failed flag play. For anybody who's gone through and watched my failed flag or heard me talk about it before, the bigger the failed flag, the better. And in my case, I like the bigger one. This is a 15-minute failed flag. It takes a persistent, consistent move to the downside, multiple days of trending, and then we get that base, that consolidation period, and then we're looking for a break above or out of that base, and we reciprocate back up. What it eventually forms is one very large cup, and then maybe a handle on that cup. During this trend to the downside, there was a bunch of micro flags through the whole thing, right? That is trend. Trend is just a collection of flags adding up more and more and more flags, and it builds into a trend. When we are no longer trending and we have a flag, flags are supposed to be continuation patterns. When you see a flag, it implies that price is going to continue moving in that direction. But once price starts to consolidate and we get those textbook, very pretty, very sexy flags where it's got that really long flag on a pole, the textbooks all say, oh, look at that very amazing flag. It's beautiful. It's picture perfect. Yeah, but if it's gone that far, it means the trend didn't continue, right? A trend is supposed to actually do something. It's supposed to trend. So when it's not doing that and instead is doing this, then the trend is dead. And that flag is no longer a continuation pattern. It's just a base. And from that base, we expect reciprocation. We want to start focusing on those levels that we would hit on our way back up and start planning out, well, how am I going to get into this thing? As long as it doesn't revisit the lowest lows, we want to start thinking about running this thing back up. This is one of my swing trade setups for the futures. I don't like to swing trade the futures a lot. They're big, right? It's got a lot of weight onto them. But this one provides targets. It can be scaled. It fits any time frame. You see a failed flag everywhere, from a 10-second chart to a 10-day chart, anything in the middle. You can find it everywhere. It's just trying to identify where along this base are you going to get in. Now, if it wasn't futures and we were talking stock, this would be generally where we start building out a position, right? We start buying in along these lows. I don't do that with the futures, but I don't have an account that size, right? You're talking 10, 12, 15, 20 contracts just building up your position along these lows. Man, I'm not doing that in the futures. But it is the failed flag setup. It's what we have right now. We have not yet got a full set in the Nasdaq either, just like we didn't have one in the S&P. So technically speaking, if we're, sticking to pure technical analysis, this has not yet begun the move back in the other direction because we are not yet valid with a full set, but it's good enough for me. Other than the economics that could come in today to whack-a-mole this market back down again, we should at the very least see a little bit of linear regression or some mean reversion, bringing price back to these previous levels. That's what a market does, right? It goes back to the mean. It's a mean reversion product. Constantly, that's all the market does. Comes back to the mean. So I want to game this out in the Nasdaq just like we did in the S&P, asking the same questions. If we don't hold this midpoint, if we instead begin reciprocating our way back up through these previous levels, where could we go? Well, we've got an ADR of 2.5. We're only up 0.25% this morning. So technically speaking, we've got a 2.25% move that we could make, and it wouldn't even be considered an outsized move. 12 hours have already gone by. So, the idea that we could move 2.25% in the next 8 hours, we can do it, but it would be lit up like a rocket ship. That thing would look a lot like this. So it won't be subtle, right? It's not going to be some slow grind. If we're going to make moves up to, say, 14,725 or 14,750, we can easily hit those levels, but it will be lit up. You'll see Apple, Microsoft, you'll see the fangs moving, have a large advanced decline line. So it should be fairly obvious. I'm going to continue to caution everybody. Watch that advanced decline line. I know that we say, the fangs control the market more than the market breadth, but there's one thing about the market breadth that stands out that the fangs don't have, and that is a correlated market state. A correlated market state is one of the most dangerous things you could ever run across. When you have 90 to 95 names all moving in one direction, it's literally saying that the entire marketplace is moving in one direction. Things can get out of control really fast, downside or upside, right? It's not just something that happens when we're headed down. A correlated market state, that extreme, is where we can really start to see just absolutely amazing moves in the market, well beyond anything that we would normally look at. There won't be pullbacks. It won't be a trend. It'll be just pure momentum. And in momentum plays, we buy high, sell higher, or sell low, buy back lower. If we're going the other way, trend trading is where we buy low, sell high. It's where we wait for pullbacks, get in on the lows, run it up to its next level. So momentum breakouts are completely different. Momentum days are completely different. Keep that in mind. Also, when it comes to a highly correlated market state, I've mentioned it before, consider some sort of blanket buy. Go in and look at the most liquid names on the list. Right now, we're still using February's levels because we haven't yet updated into March. And if you're thinking that I'm a month behind, yeah, I am. We're now in April. We use March. The most heavily traded names from March is where we get our list. It'll be the most liquid names, the most liquid options. Use that list to go through and kind of give some thought to, if you were to buy every name on the list, would that list work for your account size? It's a rare occasion that you would actually want to activate such a thing. I call it the alpha protocol for my accounts, for what I focus on. The list should be as big as you're comfortable with. The names on the list should be something that you can afford to do. And you would just go in and literally buy options in every single name on your list. You wouldn't get to pick and choose, well, I want to do this one today and I'll do this one today. You would run every single name on your list. So you want to be very careful about what names are in that list. something like a 35 or a 40, maybe a 45 delta across the board, every single name. And what you'll notice is if it's a highly correlated market state with 95 out of 100 names in the S&P 100 all moving in the same direction, the very 3 or 4 names that aren't moving, if they happen to be in your list, you get out of that call and let the others run. The algos go in and buy the basket, right? When you see the S&P futures move, oftentimes it's not because the algo bought the futures, it's because it bought what made up the futures. It bought all that 100 names or all the 500 names. The algo will go in and buy every name in that basket. So can you. We're in the position to see alpha protocol situations on a day like this, especially after such an extreme move in one direction. So be keeping your eye on the correlated market state. You can see that using the visualize tab after the market is open, right? So go to market watch, visualize, choose your index, set it to, Nasdaq 100 or the S&P 100. This is your 100 names. It'll tell you up at the top how many are advancing, how many are declining, where the money flow is. When you look at the S&P 100 and you look at the Nasdaq 100 and you see that 95, 96 names are all advancing, you're in the alpha protocol position and you're in a highly correlated market state. That'd be the time to do it. So we did the upside, we did the middle. We want to talk about what could happen to the downside. We would be looking at the Nasdaq to reclaim the lows of 14,400. There's a little bit of volume support around 14.5. We'd look for a little bit of help there, maybe something to slow the market down a little bit in its descent. And then we'd be focused on 14,400. Come out to the higher time frame, you can see that 14,200 has some volume support. A little bit of help from the pivot points. I find it hard to believe that we would get that violent today without some serious news, but there is the possibility of having that kind of news on the table. Just kind of want to game it out, measure from our current location and say, is that even within reach? Yeah, it's at 2.23%. We're only up 0.25%. So if we were to fall that far, we would only be down 2% on the day. Well, we've got an ADR of 2.5, so we know we could move that far. But again, it would not be subtle. Everything would be lit up across the board. So the dollar yesterday had significant impact in our market, and it was funny. I gave the shout out, watch out for the dollar. We were just getting back up to this previous level, and literally by the time I got it posted into the chat and I looked back, it started to sell off, and it was like a smackdown. As soon as that thing sold off, the market just ripped up out of those lows. The dollar was shaking our market around, bullying our market yesterday like crazy. It was the go-to product. Now, in the last 2 days, the XLF and the dollar, the bonds, they've been the best indicator to watch on a day-to-day basis trying to trade in the S&P and the Nasdaq. So if you were getting psyched out and faked out yesterday with those ups and downs and not being able to anticipate the turns and trying to figure out which direction to go and would the level hold and is that really support, and thinking that the market was a little bit schizophrenic, and you weren't able to anticipate those moves, it was very likely because you were looking at the wrong thing. I've said it before, I'll just continue to say it. I don't care what you trade, you can't go in and stare at that one thing that you're trading. whether it's Facebook, Apple, Amazon, Microsoft, or the Nasdaq futures or the ES. I don't care what it is that you're trading. If the only thing you're staring at is that one thing that you're trading, you're blind. You have no freaking clue what's going on in the rest of the market, and the rest of the market is going to bully your market. These things are all interconnected. That one market that you're trading is not moving by itself. It is connected to everything else. So take a look at everything else that's going on. They say that one of the best indicators you could ever look at is price action. That makes sense, right? It really does. It makes perfect sense. So the more price action that you can look at, the better. The more things that you're looking at. The advancing issues in the Nasdaq, the advancing issues in the S&P, cumulative tick. That Russell breakover in the cumulative tick yesterday was a huge heads up. Even just the fact that we were running sideways in that thing told us a lot about what was going on yesterday. Looking at the FANG names. If you're a futures trader, take a look at the actual index that you're trading, right? You're trading in the forward future contract of the S&P if you're trading in the ES futures. It's the forward future price of something. Well, what's the right now real price of something? That would be looking at the actual index that you're trading. Yeah? Yeah, you like it. I seen a lot of posts yesterday where people said, "Hey, what happened? You telling me you didn't know that there were Fed minutes yesterday?" Come on. So we got energy up this morning. Jets did really good over in Europe last night in the overnight hours. We want to find emerging markets. That's a sign of global risk on and risk off. Take a look at what's going on in junk. Before we go over to TrendSpider, just take one last look at this grid here. This is the 10-year. I often swap this out with the 30-year. So the ZN and the ZB. You can see we just got that double bottom in the ZB. So critical levels. It seems like now the markets are starting to talk about it a little bit more. But we've been seeing some really crazy stuff happening in the bond market. We're breaking into some serious critical levels. It's a little scary that it's so widely just ignored. But we're getting down into some serious levels. Keep your eye on these things. They've been, the most valuable tool for our heads up. We got finance kicking off earnings season next week. So be careful when you're looking at finance, thinking that there's an opportunity to trade in a swing trade. Short duration swings, yeah, and definitely for day trades, absolutely. But don't try to pile in and go long. And there was a memo sent out yesterday by one of the firms saying that tech was really, really heavily sold and was looking prime or juicy or kind of in some way implying that there's a discount right now for these mega cap blue star grade A companies, right? Like your Dow name companies, and that we could get them right now at a steal. That is one perspective. And if you've got a large portfolio, it's worth, considering. It ties into the idea that you want to allocate and start buying into companies when markets are falling, thinking of the big picture, thinking of the longer term that, when we rally back up out, you picked up things at a discount. Having said that, though, we've still got a lot on the table. We've got a lot going on, and we have not yet seen the ramifications of the impact of all these companies that pulled out of Russia. McDonald's and Pepsi and Coke and Starbucks, the list is endless. So be very cautious on this idea of long-term allocation into those heavy weight tech names. Keep some cash on the side because I don't think we're done yet. Right. And then add to that, when they raise rates historically, we get a bullish market. Right. So that was a little bit of a surprise when I came across that and start looking at seasonality. When they actually start raising rates, we get a bullish market. So in the near term, we could see reclaiming the previous levels. We could see the S&P and the Nasdaq doing fairly well in the near term. And just the fact that one of those firms, and I don't know which one it was, J.P. Morgan, Wells Fargo, it was one of them. The fact that they're saying that tech looks really good right now and is a buying opportunity kind of implies that they see that there's some room in there, maybe a good 6 to 9 month window where we could have some opportunity for upside before things start to get nasty again. No, it's worth considering. Just approach with caution, right? That's one way to say it. Approach with caution. Normally we would do spreads. We were talking about this yesterday. I haven't been doing very many spreads. The reason why is when you get a spread, the size you make it is how you cap your risk and control loss in the trade. You just make it a size that you're comfortable losing. Okay, I mean, I get that. But if it does start to lose, the only thing you can really do with it is maybe roll it or close it. Not a lot of protection for that trade. But if you just straight up buy a call or buy a put, and then things don't start to go your way, you can sell against that put. So it has its own inherent built in protection. That's the only reason that, or the only way that I've even been willing to trade in the market right now. Go 100 days out or 120 days out, buy your call or buy your put. If the market doesn't run in the direction you thought it was going to run, sell an option against it. Make your money back. Spreads are better from the idea that you have a defined risk. It won't lose very much, but there's really no way to defend that spread. Whereas with a single option, there's so many ways to defend it. All right, so the chips don't look too bad this morning. A lot of names are above a 0.5%, which is kind of my benchmark. We do have a few that are down. TSM is the most notable, but Intel kind of flat. Crypto's looking really good this morning, which makes sense considering how much they were off yesterday. Crypto's got that BITO ETF now. This is BITQ, but there is a BITO as well. There it is. This allows you exposure to, Bitcoin markets without trading Bitcoin. It's got relatively decent options liquidity wise, and it has enough volatility for the options to actually be juicy enough to sell against. I tried to get a trade started yesterday. I was going to go out and trade into this. I believe the strikes that I found that had some existing open interest was 25. Make sure I'm telling you the right strike. Yeah, so the 25 strike for January, 288 days out, that would still be close enough to the current market price. They if you buy that put, think of it like a hedge. And if we buy that put, if things don't go well, Bitcoin doesn't continue to go down, then you can come in here and you can sell puts against it on a day-to-day basis. And it's a hedge, right? So you're not buying that put thinking that Bitcoin's going to go down. You don't want Bitcoin to go down. You would be buying that put solely so that you could go in the front and sell options against it. When you sell a put underneath the market, it implies that you're slightly bullish neutral, that you think it's not going to fall lower than the put that you're selling. And if you look at the prices, I mean, considering that this is a $25 product, right? That's important to recognize when we're looking at these prices. If you're looking at this thinking, yeah, I don't really want to sell that, it's only $83. It's only $83, but it's a $25 market. This is a cheap product for people to begin learning how to do this without getting hurt. You go in and use something like Tesla or Amazon or Roku when the options are thousands of dollars, you're going to get hurt. You got to learn how to do it and learn how to do it and make mistakes in something cheap and small. You can learn how to do it in a market like this, and maybe you're not going to make a house payment, but you'll learn enough about how to do it that when you do go into those big boy products, you don't blow your account up and get your face ripped off. So I'm going to continue to try to get filled in this. May revisit it later today, see if I get an opportunity to get into it. If you did want to do the call side, the same play works the other direction, right? If you did want to go the other way, if you thought that we really are bearish and you want to short Bitcoin, you could look at buying the call, something around the 30 strike. It's got some nice liquidity to it, and then selling calls in front. Right? It'd be the same play, just doing it the other direction. So looking at the sectors this morning, marijuana, oil, airlines, energy, gold, the devil's metal slightly up, silver. A lot of the sectors that are up this morning are the same ones that did really good last night in Europe. I mean, well, Europe is still, their market's still open, but it's a later part in the day. And the EV market is looking pretty good this morning. Um, Oddly enough, one of the legacy names, Ford's not doing too good. GM is up though. So for the most part, the EV market's looking really good this morning. And pot stocks are looking really good. The day trade for me in the last 2 months has consistently been energy and finance. They're cheap names. They're really liquid. They've got, options that we can afford. And the suckers, I mean, they move, right? It's kind of the whole idea. I'm not seeing anything today that would change my mind on that. Keep in mind, I mentioned it, but I didn't really point you in the right direction. If this is going to be a reciprocation trade today, if we're going to see all of the market try to mean revert back into that previous level, then names like Tesla, Google, Amazon, those things are going to make big moves today, right? If we're talking about seeing the S&P and the Nasdaq make even half of that distance back to the upside, names like Amazon or Tesla that are down significantly out of that base or that box that it's been in, could easily make half that distance back. So you're looking at Amazon at like 32.5, 33. That's not out of line. It's easily within reach of Amazon. Which means, you got a place to start when you're looking at, well, what call do I want to buy? The 3300 call, 3350 call. You might think that that's way too far out of the money. It's not. It's even got an additional market maker move right now of $50, another 1.5%. If it's going to be one of those days today, then these high beta names have the potential to really do exactly what they're good at doing, getting the heck up and moving. Google, 2800, 2840, even 2860 isn't out of line, but I mean, realistically, 2860 is kind of pushing the envelope. It would be lit up for a market day like that. Tesla was getting rowdy this morning and already started to pull back off again. But this is another one of those high beta names that can really make significant moves. 1100, even 1125 is not out of line. Uh, all directly connected to the idea that we're going to get that mean reversion play, seeing the S&P and the Nasdaq begin working back towards those previous levels. So that's what I got for you guys. Be careful, be safe, have a good day. I'll see you all tomorrow. Watch the clock.